As you all should know, real estate investing can be a robust income stream and a great asset class to add to anyone's main source of income. But here's the problem. Not everyone has the money or the credit to buy properties. I mean, heck, it's bad enough with inflation rising and house prices skyrocketing. I'm sure we've all got bigger issues to worry about, right? The point is this: many people are discouraged from investing because they lack the cash or credit required to make a purchase. But I have great news. There are a lot of ways to get into real estate without either one of those. In this video, not only will I show you my exact secrets of how to buy real estate without cash or credit, but if you stay until the end, you'll learn some creative strategies that you can use to invest in real estate without breaking the bank. So without further ado, here are 6 ways to buy real estate without cash or credit. Number 6. Seller financing. When it comes to purchasing real estate, many buyers assume that they need to secure traditional financing through a bank or other lending institutions. However, there is another option that could work in your favor. That would be through seller financing. This approach involves the property seller acting as the lender for the buyer, essentially cutting out the middleman and streamlining the transaction. Basically, the seller becomes the bank and you get to negotiate on your own terms. Of course, not all sellers will be open to this type of arrangement, but if the seller owns the property free and clear, they may be more willing to entertain the idea. With seller financing, you'll typically make payments directly to the seller instead of to a bank or mortgage company. This can be an attractive option for buyers who have struggled to secure traditional financing or who want to avoid some of the fees and restrictions associated with bank loans. Want me to tell you its advantage over the others? One potential advantage of seller financing is that it can be a faster and simpler process than going through a bank. You may be able to negotiate more favorable terms such as a lower interest rate or a longer repayment period. Not only that, but because you're working directly with the seller, there may be more flexibility in terms of the down payment or other aspects of the sale. And yes, you guessed it, there are also some potential drawbacks to consider. For example, the seller may require a higher down payment or a shorter repayment period than you would get with a bank loan. Because the seller is taking on some of the risk, they may charge a higher interest rate to compensate. Number 5. Lease options. So you want to buy a house, but you're stuck in a bit of a financial pickle. Maybe your credit score isn't quite where you'd like it to be, or maybe you're struggling to save up for a down payment. If this description suits you, don't worry. There's a potential solution that may be just what you need: a lease option. So what exactly is a lease option? Basically, it's a way for you to lease a property with the option to buy it at a later date. You'll pay rent like you would with any other rental agreement, but you'll also have the opportunity to purchase the property at a set price when your lease is up. This can be a great option if you need some time to build up your credit or save up for a down payment, but still want the security of knowing that you have the option to buy the property later on. But sad to say, this one also has a downside. For one thing, if you decide not to purchase the property at the end of your lease, you'll forfeit any money you've put towards the down payment or other fees associated with the option. The price you agreed to pay for the property may be higher than what it's actually worth if the market takes a turn for the worse. That being said, a lease option can be a great way to bridge the gap between renting and owning. You'll have the freedom to make the property you own without committing to a full-blown mortgage, and you'll have the option to buy when you're ready. Plus, who doesn't love a good option? It's like getting a topping on your ice cream. Sure, it's extra, but it's nice to have the choice. Keep watching because I want to tell you how to invest in real estate like a boss without having to max out your credit cards or sell your soul to the bank. And trust me, it's not as impossible as it sounds. But before that, please like and subscribe to the channel for more videos like this. Share this to others as well so that it can spread to more people. And now, number 4, subject to property deal. Essentially, a subject-to deal is a win-win situation for both the buyer and seller. The buyer takes over the existing mortgage on the property, so there's no need to go through the hassle of applying for a new one. Instead, the buyer simply makes payments to the original lender, and the seller gets their property sold quickly. But there's more to it than just convenience. Subject-to deals can also be a smart financial move. For one, the interest rate on the existing mortgage can be lower than current rates, which means the buyer saves money in the long run. Plus, since the buyer isn't technically taking out a new loan, they may not need to put down a large down payment or pay for costly private mortgage insurance. Here's a tip. Have a thorough understanding of the existing mortgage and the terms of the deal before jumping in. But if you're a motivated seller or a savvy buyer looking for a creative financing solution, a subject-to deal may be just what you need to make your real estate dreams a reality. Number 3. Wholesaling. Now, this one may be something you don't hear so often, but let me explain it to you. Wholesaling involves a wholesaler entering into a contract with a property seller and then assigning the contract to another buyer for a fee. To put it simply, the wholesaler serves as a middleman, bringing together buyers and sellers and earning a profit in the process. While wholesalers can be a lucrative way to generate quick cash in real estate, it requires a certain level of expertise and skill to be successful. Yes, and I mean it. Wholesalers must be able to accurately assess the value of a property and negotiate favorable terms with the seller. They must have a network of reliable buyers who are willing to purchase the property in question. The key to successful wholesaling is to build relationships with both sellers and buyers in the real estate market. By cultivating a reputation for fairness and integrity, wholesalers can attract a steady stream of business and earn the trust of their clients. Aspiring to become a successful landlord? Follow our channel and never miss an update by clicking the like and subscribe button for all of our new real estate content. Number 2, crowdfunding. Crowdfunding is considered as the modern-day equivalent of passing around a hat to gather some funds for a common goal. Instead of collecting coins and crumpled bills, we now have the power of the internet to bring people together and invest in real estate properties. With real estate crowdfunding platforms, investors can band together and pool their resources to make big purchases. You can think of it as a group buying spree, but with much more profitable results. So, want me to tell you the best part of this one? You don't have to be a lone wolf in the investment world anymore. If you have a network of people who are as eager to invest as you are, then you're well on your way to some serious financial gains. If you're just starting to dip your toes into the world of real estate, crowdfunding could be a viable option for you. Just gather your crew, put your heads together, and watch your investment grow. Number 1, hard money lenders. No cash, no credit, no problem. Hard money lenders are private lenders who offer short-term loans secured by real estate. Unlike traditional banks and lenders, hard money lenders typically base their lending decisions on the value of the property being used as collateral rather than the borrower's credit score or financial history. Hard money loans can be used for a variety of purposes, including buying or renovating property, paying off debts, or covering unexpected expenses. However, they are generally considered to be a last resort option due to their high interest rates and fees. Now, why choose hard money lenders? Good question. I can give you 2. One of the biggest advantages of hard money lending is the speed at which borrowers can be approved and receive their funds. Since hard money lenders base their lending decisions on the value of the property being used as collateral, the approval process is much more faster than traditional lending options. To add, hard money lenders are typically more flexible than traditional lenders when it comes to the terms of the loan. Borrowers may be able to negotiate the length of the loan, the interest rate, and other terms to better suit their needs. While hard money lenders may not be the right choice for everyone, it can be a useful tool for those in need of quick cash or for real estate investors looking for alternative financing options. As with any lending decision, carefully consider the terms of the loan and weigh the potential benefits and drawbacks before making a decision. The bottom line is that investing in real estate without cash or credit requires creativity, persistence, and a willingness to think outside the box. Remember to do your due diligence and research the market thoroughly before making any investment decisions. But with these strategies, you can begin your journey to become a successful real estate investor. The only question now is, are you ready to invest in real estate? Please share your thoughts in the comments section below. Make sure to like and subscribe to the channel so you won't miss any of our upcoming videos. In fact, if you want to see exactly how to buy a rental property with no down payment, watch this video next, where we'll explain it step by step for you. So click the video on the screen now, and we'll see you in the next one.